Well, here in Spain, Chris McCann is back this week, and we're going to pick up where we left off. Last week, he updated us on investment markets and covered the time, not timing investment principle. If you missed it, you'll find the recording on the podcast page of Blevins Frank's website, as well as on their social media channels. Today, Chris will share more principles of successful investing. How are you doing, Chris?
Yeah, very well, Howard. It's good to be back. How are you?
I'm fine. A week is a long time in politics, as they say.
Yeah, absolutely, especially at the moment.
Yes. Well, Chris, there can be a lot of highs and a lot of lows with investments. Would you agree investing is an emotional process?
Well, we're all human beings, so we're emotional, and we all get scared. The real key to successful investing in risk assets is not to get scared out of them. Every year we have reason to be scared because there's no year where the market just goes straight up. There are market declines every year, year in and year out. But if we look at the long term, markets have continued to rise in spite of these regular declines, which means as an investor, you must be thinking of risk as a feature, not something to fear. The history of investing is littered with corrections and bear markets, and so we're constantly faced with reasons to sell. When you're living through them, it can feel like the end of the world. However, one must always remember that every market crisis to date has always been followed by an economic expansion and a new all-time market high. Really, it's a bet on future prosperity. If you don't think we're going to have technological innovation, continued consumerism, and companies are not going to be doing better 20 years from now, maybe investing is not for you. To be a successful investor, you need to be an optimist, or at least have a financial advisor that's going to help you invest like an optimist.
Okay, now we're clear on the emotions evolving and how to harness them. So what would you say is the first principle of successful investing?
Well, Howard, I think it's interesting. People spend thousands and thousands of hours building their wealth. They spend a lot of time at work. But in my experience, once they've accumulated their wealth, many people spend hardly any time creating their own financial plan. In my opinion, the first principle of successful investing is to determine what your objectives are and then to formulate a plan to achieve your objectives. In other words, where are you now? Where do you want to get to? And how are you going to get there? Here at Blevins Franks, we start by getting to know our clients before we create a suitable plan. With a long-term plan, you become an investor rather than a speculator. As an investor, you're ignoring short-term noise and you're investing for the longer term. You're thinking about years instead of days. With a long-term plan, it becomes a lot easier to keep your emotions in check. And with your emotions in check, you're not jumping into bubbles and selling out after panics along with the masses. Instead, you're significantly increasing your chances of becoming a successful investor. In brief, if you have a plan that you feel good about and really matches what you're trying to achieve, it becomes a lot easier to accomplish what you need and what you want.
What would you look at next?
Well, look, the next step when working with our clients, we follow a series of what we would consider proven investment principles. The first three of these principles are behavioral principles and include faith in the future, patience, and discipline. As regards the first, faith in the future, as I've already mentioned, long-term pessimism is deeply counterintuitive and rarely profitable. Optimism is the only worldview that squares with the historical record, so it's important to have an optimistic outlook. Patience is the second. We live in an age of frequent breaking news, which places the investor under constant pressure to react. The more an investor gives in to the fads and fears and the more they lose sight of their long-term financial goals, leading to more mistakes and diminished long-term returns. The third is discipline. While patience can prevent you from making poor decisions, discipline enables you to continue making correct decisions. Disciplined investors don't allow themselves to be swayed by sentiment and keep their plan on track to achieve their long-term goals. The second three principles are successful methods of managing a portfolio. Firstly, the most significant factor in determining portfolio returns is asset allocation, which involves distributing an investor's capital across lots of different asset classes. Some investors believe that the returns of a portfolio are primarily influenced by investment decisions and the timing of those investment decisions. However, in the long run, both timing and selection play a relatively minor role in shaping returns. The next step is to get broadly diversified, which involves the spreading of risk and reward within a portfolio. And the final step is rebalancing. Once your portfolio is set up, it should be reviewed on a regular basis and rebalanced back to the desired original weightings if necessary. So with a long-term plan in place, following these 6 principles will likely significantly increase your chances of becoming a successful investor.
I guess the last piece of the puzzle is choosing the investments.
It is. We live in a world where the number of investment choices continues to rise exponentially. To put this into a bit of perspective, in 2002, there were around 30,000 managed investment products to choose from. But over the following 2 decades, this has grown now to around 740,000 different investment products. And you can imagine the difficulty in choosing the appropriate one given the number of available investment products. Here at Blevins Franks, our role as advisors is to guide our clients through this maze and advise on the most suitable investment managers to meet their needs. We work with some of the most prestigious investment management organizations, and together we will create a bespoke portfolio designed to meet our clients' needs, specific objectives, in the most tax efficient way possible.
How can people get in touch with Blevins Franks?
People, as always, Howard, can visit our website, blevinsfranks.com. They will be able to access all the telephone numbers of our local partners. If they prefer, they can fill in a contact form and somebody from Blevins Franks will be in touch with the most appropriate next step.
Many thanks. Keep cool, I think, is the advice for, everybody listening as well.
Yes, I will be staying in my office and enjoying the air conditioning as much as I can, Howard.
Okay. We'll talk again in a couple of weeks. Thank you very much indeed.
I look forward to it, Howard. Bye for now.